It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
I mean, you could be 18 years old and you could be owning pieces of property in the huge Sydney suburbs of Mossman, Vaucluse. You could have a little piece of that, and you could diversify right across the markets. You could buy in Queensland, you could buy in WA. So you're spreading your risk.
And that is Paul O'Riordan, and we'll get back to that conversation in just a moment. And welcome back to another episode of the Real Estate Breakfast with more of your property insights and interviews as we connect you to the best real estate information, all of the experts, the professionals, 7 days a week. Yes, we call them the go-to real estate commentators, and they literally are scattered right across the country for that unbiased point of view, because we are not a real estate company. You can stream us this weekend anytime, anywhere, including iHeartRadio and Amazon. And it's a Saturday morning, March the 22nd. Good luck with any auctions or open homes that you might be attending either today or tomorrow. Housing affordability, it has been such a talking point for a number of years, particularly since COVID. And with the upcoming federal election, it is fair to say probably well and truly back in the spotlight. And this morning we are going to dive into how Sydney's real estate market has changed from 2000, that's from the year 2000, to 2025, and look at what the next 25 years could look like. Boy, just stretch your mind back to the year 2000. We all know pretty much what we were doing back in 2000, and the property market has certainly moved in such an enormous way. Is home ownership going to become even harder as we traverse the next 25 years into the future? Well, let's catch up once again with Paul O'Riordan, the principal of O'Riordan Real Estate in the Blue Mountains. And good morning to you, Paul. Welcome back to the Real Estate Breakfast. I mentioned just how busy these auctions are, always busy on a Saturday, always busy on a Sunday with open homes, and I know that you're busy as well.
Very much so, Craig. Great to be with you. Looking forward to the autumn market and the temperature dropping just a little bit, which suits me down to the ground.
Yes, the temperature certainly on the way down. Now, as mentioned, looking at the housing market, particularly Sydney's affordability market, and how that's kind of shifted over 25 years, we're going to be talking this morning about some of the trends and what has shaped the market and where we stand.
Yes, we are. Look, if we cast our minds back to the year 2000, I can certainly remember it. The Sydney population was around 4.1 million people. The Sydney Olympics were happening, and major tax reform from the government with the GST being introduced. So it's all that time ago. The numbers in the Sydney housing market, boy, oh boy. Median house price, $287,000. The interest rates were around 6%. The average weekly wage was about $800 a week, and stamp duty on the median house price was a little over $8,400, or equivalent to about 10 weeks' pay. So nice and affordable sounding there. You cut to 2025, the numbers couldn't be more different. Population about 5.5 million, so that's a 35% increase. Median house price, 1.45 million. Interest rates about the same, give or take around the 6% mark. The average weekly pay, about $1,975 a week. And stamp duty on the median house price, $63,500, or equivalent to 32 weeks pay. So the increase has been immense. In the year 2000, look, the median house price was about 4 times the average household income. This year it's about 10 times. So it's easy to see why the affordability topic keeps raising its head.
You know, those numbers, when you break it down like that, 25 years ago, yes, it's 25 years, but it doesn't seem that long ago, which when you said that, just come back to that median price back in 2000, what was it? What did you quote?
$287,000.
$287,000. Yes, horses for courses, but when you compare it 4 times the average wage and now 10, I mean, that is such a massive, massive price shift, isn't it?
It is huge. And look, you can see why a lot of the Sydney market is people who might have bought back in 2000. So the capital growth they've seen is immense. And they're kind of the dominant buyer who are selling and moving to somewhere else in Sydney because they're the ones that can afford it. But you look at if you're a first home buyer or getting on the property ladder, boy, oh boy, at 1.45 million, you can see why it's tough.
Yeah, that's where the baby boomers, Paul, they're getting blamed, of course. It was the baby boomers back in 2000.
Well, look, it might even be Gen Xers. I'm not that, I don't know if I was buying a house, well, certainly wasn't buying a house back when the Olympics were on, but Gen Xers, if you bought in kind of the late 90s or early 2000s, you're sitting pretty well now.
Yeah, for sure. Okay, home ownership, is it still achievable? That's the big question, or has it become a bit of a distant dream? We're talking about those soaring prices this morning. Interest rates, hopefully they're getting tamed. Harder than ever, though, as you're explaining. It's still harder than ever to get onto the property ladder.
Look, it really is. So if you're a first home buyer, I think the dream of a Sydney property is probably out of reach, and I don't think it's coming back anytime soon. The home ownership dream isn't dead. You just need to broaden your horizon a little bit. So if you look at areas within a 2-hour drive of Sydney, these are places like the Central Coast, Blue Mountains, Wollongong, the Hawkesbury, and into Penrith. Prices are very, very much different. So look, Central Coast, about $1,070,000 is the median house. Blue Mountains and Wollongong around the $900,000 mark, and the Hawkesbury and Penrith at $750,000 and $700,000. A lot more attractive looking numbers for first home buyers. So the dream is achievable and still achievable. You just need to broaden your search perhaps out of Sydney and look at that as maybe the second or third home. When you get up, you just need to get on that property ladder.
Exactly right. You've got to get on that property ladder, and Paul is highlighting the Blue Mountains. And when we come back, what we're going to look at is what could the Sydney property market look like in 2050. That'll be interesting. We'll do that after this.
Every morning from 6 a.m, we bring you the latest real estate news with diverse perspectives from leading industry experts. We deliver the most property podcasts across Australia every week.
And right now it is time for another piece of advice in the form of a property tip. And we are going to Samuel Williams there in Sydney. Samuel, we're talking about compromising. Yeah, that's always a big one.
Very big one. I think no one really wants to compromise. And my tip for buyers is that if you find the property that's perfect for you, it's almost surely to be perfect for a lot of other people. So they're probably going to have the most competition on them when you go and bid for them. If you can look for something that's probably second or third on your list with not a whole lot of compromise, but ones you can put up with, you're probably going to get the best deal as you've got the least amount of competition. And so you're not going to be paying a full premium.
Explore new property destinations where you could live with exclusive interviews covering real estate news and market insights.
And it is a Real Estate Saturday into another weekend around the country, talking about how expensive Sydney is, particularly for first home buyers. Are you looking at just moving a little bit further out into areas like the Blue Mountains? Paul is with us this morning, and we're going to, this is really interesting, Paul. We're going to take a look at a crystal ball here, what Sydney property prices could look like in 2050. And if you think 2050 is miles and miles away, just do the inverse of the year 2000. Doesn't seem that long ago. So based on current data, Paul, where are we headed in terms of pricing, supply and demand for 2050?
Look, I've polished off my crystal ball, and this is very much crystal ball. So looking at different trends, population growth and all those things, which are obviously going to be major players. But if you just apply, I thought, well, look, how am I going to break this down to a simple term? So if you just apply the growth from 2000 to 25 and just add that on to 2050, the numbers are quite shocking. So the median house price, if it does what it did in the last 25 years, it'll be up 500%. So that'll be up around the $7.2 million median house price. The average wage would grow by about about 250% to about $4,800 a week. And the stamp duty rates would be at $381,000, which would be 78 weeks pay. So huge differences. So you can see why it's extremely clear that substantial change is needed in the system, or affordability is going to be out for nearly everybody.
I think what you've said is more than likely going to actually eventuate. If you just follow what has happened over the last 25 years, there's going to be a little bit of movement on the numbers, but it'll be pretty much similar. And that probably highlights the fact that if you buy a unit, so often units were looked at as, well, it's just a unit. But you're going to be doing pretty well if you've got a unit in 2050.
Very much so, absolutely. Look, the old saying in real estate, when's the best time to buy real estate? And the answer, 20 years ago. Truer words haven't been spoken, but the next best time is now. So getting on the ladder, I think, is imperative, looking at what could happen over the next 10, 20, 25 years.
Now, what policies or innovations could make housing more affordable in the future? What about blockchain technology? Is that going to play a role in transforming the way that we buy and sell property? What do you think?
Look, I think that's a very interesting technology. And look, going forward, I think it will play a pretty big role. It's already happening in the US and other countries around the world. Look, the general idea or the premise is tokenisation of your property, which allows fractional ownership. So the concept, if you take $1 million home, that's converted into, say, $500,000 $2 tokens that are put on the blockchain and they are traded on the open market. The value of these goes up and down with the property market. Occupancy rights would be person who owns 60% or more of the tokens. So this could mean you only have to pay 60% of the home value and the other 40% is owned by investors or other people, possibly even the government. The advantages, I think, of tokenisation, improve liquidity. So without the need for banks, so if you owned outright 100% of your home, you could possibly sell 10% on the open market to fund renovations, help your kids buy a house, and that would all be interest-free. And then at a later stage, if you wanted, you could buy back that 10%. If you're a young person saving for a house deposit, you could buy tokens in real estate rather than put your money in the bank. And if it's a property that is rented out, you would get a percentage of the weekly rent yield, which will help you save quicker. Developers could benefit as every token is traded, a fee is paid through a smart contract. So if a property is sold by a developer, they obviously get a royalty fee. And every time that token is purchased in the future, they would get another royalty fee. So it could make the construction costs smaller because there's a revenue stream for developers going forward. So look, it's early days for something like that in Australia. It's being adopted a lot more in countries like Dubai, America, Singapore. But I think going forward, the technology around the blockchain and the security of it is going to have an impact on the Australian real estate market.
Yeah, it's interesting because so many countries have been so resistant to the blockchain over a number of years, but it is moving. The needle is definitely moving. And you raise an interesting point, particularly around fractional ownership. And if you were to expand that out to what we were just talking about, 2050, if you're into that fractional ownership, that's going to pay dividends.
Look, it certainly is. So as a young investor, I mean, you could be 18 years old and you could be owning pieces of property in the huge Sydney suburbs of Mossman, Vaucluse. You could have a little piece of that and you could diversify right across the markets. You could buy in Queensland, you could buy in WA. So you're spreading your risk and you can buy $50 worth of a house every other week if you want it. So just that adoption, I think, is going to be very exciting. I mean, something has to happen to the Australian property market because it can't just go on at this rate of growth. So having major change there, I think, is needed. Obviously, supply and demand is still probably the biggest factor, and the cost of money. The biggest growth you see when you look between 2000 and 2025 is when the money got down to 3%, and that's when you really saw that huge growth from 2010 to 2020. It was up well over 100%. So something needs to be done, and blockchain could be the thing.
Well, you have given everybody something to think about on our Saturday morning and for our weekend. So thank you for that, Paul. Enjoy your Saturday and the weekend and look forward to talking again soon.
Fantastic, Craig. Really appreciate it.
We connect you to the best real estate information across Australia. The Real Estate Podcast.